Hello, this is Tom Cloud with this week's Precious Metals Market Update. I want to change things on you a little bit as a technical picture for gold and silver right now. We're in a consolidated period. We've seen silver up over 40% this year. It's had an 8% pullback the last 2 weeks. We saw gold up as much as 28%. Now it's up 22% for the year, and we're going into the best time of the year historically. So rather than talking about technical points, I want to talk about some things that we never talk about on the fundamental side. Number one, I have never, in 40 years of doing this, had as many calls from financial advisors trying to educate themselves as quickly as they can because they don't want to look stupid like they did in 2008 when the stock market dropped 38% and gold went up 8% and they had zero allocation. So while I'm one guy, but I do come from a financial background, financial planning background early in my career before starting this firm, I do have a lot of contacts with financial advisors that look at gold and silver as a small insurance policy in their portfolios. I can tell you we have done more business this year than in any year in my career with financial advisors that are sending clients to us that want physical metal, not ETFs, paper that's not real gold. It's paper. You can't take delivery of it. You can only redeem it for more fiat paper dollars. So you want physical gold in your hand with at least part of your portfolio, physical gold and physical silver. So number one, the financial advisors are trying not to make the mistake they made as they realize the equity markets stand to make a big drop. Number two, I've never had as many people calling asking me about what's going to happen with the special drawing rights. I've had to go back and explain how the IMF and special drawing rights came into existence in 1969, bring them forward and show today that only United States, the Japanese, the English, and the Euro are the only four special drawing rights with the IMF, and China's getting ready to start that on October 1st. And now, literally today, I find from very reliable sources that China could say they have as many as 11 or 12,000 tons of audited gold. And people, if that is true, and I'm not saying it is, if that is true, the United States does not have the 8,163 tons because there's not that much gold in existence in deliverable warehouses for delivery. If that happens, not only will the dollar drop significantly, many people are calling for a September 30th event, one day before China takes special drawing rights, and then others are saying you look at what will happen as those five currencies start and each one has a weight on it, and then as one goes up against the other, the weight will change. And we have people like Jim Rickards out saying get involved in those SDRs by buying Chinese yuan, Japanese yen. You can buy those in ETF. They're not like physical where you have to have the gold. But we could have a dramatic change over the next 6 weeks, and people are kind of yawning at gold and silver right now. But it's my belief that starting after Labor Day next week, anything could happen, and I do believe the dollar is going to get trimmed either way. Because if China announces not only they have the 1 trillion, 200 or 300 billion in U.S. treasuries that they would begin to sell and back their own currency and special drawing rights to get the Chinese yuan weighted higher in this basket. So that's number one. No update on the Japanese situation except they're going to print more money. There's going to be higher inflation. They're going to come out of negative interest rates. And all this is going to be great for gold. And we already see Tanaka Trading having record weeks in physical gold and silver in Japan. And then lastly, I don't have any update for you on the Sharia law and Muslims. 20% of the world's population being able to buy gold and silver as part of the Sharia law that's being looked at by the Islamic Fundamentalist and Accounting Institute. So last point on that is we're seeing a lot of gold purchased by the central bank, and this is interesting because the only central bank the last 12 months that has gone negative is Canada. They're the only ones that are not buying gold, while the rest of us sit here and look. And then we see last week George Soros, the common enemy of the middle American or the middle income people, is buying gold like crazy, and he has to disclose it. So just look at what they're doing, not what they're saying, and we're in for some very interesting last 4 months of the year. But hopefully you're in there, and I think I mentioned to you last week, I think it's the Becker Institute, that could be a wrong word, but they're saying that there's 10,000 banks and companies that are going to take the Chinese yuan the minute they get the special drawing rights. That's going to be 10,000 entities that do not need the U.S. dollar anymore, and therefore this will be very detrimental to the dollar. And as U.S. treasuries are liquidated, two things will happen. Interest rates will go up, and the dollar will go down in the world market. So be ready for it, and we'll talk more about it as we get closer. Once again, if you want to talk about a precious metals IRA, self-directed, give us a call. We'll walk you through that. If you're still holding rare coins, we urge you to strongly get into bullion coins as quickly as you can, because you can look back over the last 16 years and rare coins have not even doubled, while gold's gone up 550%. And we expect that to continue. So hopefully next week we'll have an update as we roll into September. With this week's Precious Metals Market Update, this is Tom Cloud signing out.